Stocks are at all-time highs. So, should you ride that momentum or invest in bonds or gold instead? Coming up, we'll hear what some of Wall Street's top strategists are recommending right now, so hit that subscribe button and let's dive in to this week's market moves. Okay, so we mentioned stocks have had a big run this year, and if you're still bullish, you're not alone. Goldman Sachs, for example, told clients at the end of last month that their team believes the rally in global stocks will continue into the end of the year. Goldman cited earnings growth and a willingness on the part of central banks to cut interest rates. As for where to be invested, Goldman is suggesting that global investors could be the best positioned. It cited the performance this year of, as an example, the MSCI World Index, which has had better returns in 2025 than, say, the S&P 500. Now, by comparison, the chief investment officer at Morgan Stanley likes stocks, but is encouraging investors to split the rest of their portfolio between bonds and gold. Speaking at a Reuters event last month, Mike Wilson presented what he calls the 60-20-20 portfolio. That's 60% equities, 20% bonds, and 20% gold. Wilson's making the argument that if you're looking for a hedge against inflation, that gold ultimately might be a better bet than bonds, and might be a better overall bet than the traditional 60-40 split, 60% being equities, the other 40% of a portfolio being fixed income. Finally, the strategy team at Bank of America believes you can have solid returns without having as much stock exposure. Strategist Michael Hartnett told CNBC his ideal mix is between stocks, bonds, gold, and treasury bills, which is in many ways similar to cash. He's advocating 25% weightings between all four of those areas. Hartnett added that the power of diversification shines through when you look at performance over time, noting that his strategy recommendation has kept pace with the so-called 60-40 portfolio breakdown so far this decade. Now, if you're curious about using ETFs to achieve your asset allocation goals, Global X can help. For example, if you're looking for a product with a weighting of 60% towards fixed income and 40% towards equities, there's HCON. If you want the reverse, 60% exposure to equities and 40% allocated to fixed income, there's HBAL. Those are just a couple of the Global X products. If you want to learn more about their asset allocation ETF strategies, check out globalx.ca. All right, that's it for this week's Market Moves. What market moves are you watching? Let us know in the comments, and don't forget to subscribe so you don't miss our next Market Moves video. See you next time.